Hey y'all, hey, welcome to another conversation of information with straight out the group chat. I got my girl, Miss Shauna, in here with me, and we are talking about mortgage loans tonight. Shauna, how you feeling
Yes,
tonight, sis?
I am good. I'm good. How are you?
I'm good. I'm good. No complaints. I don't have any complaints. I'm feeling good today, and that's just it. Made
That's
it
it.
another day.
That's it. That's it. We here. We
Yeah,
made
that's
it.
that's it. That's how we act for sometimes. So the first question or the topic of conversation I wanted to ask you about, since you are a experienced mortgage loan officer and you be doing your big when I see you, I'm gonna link all your stuff in the comments so everybody can come check you out. I'm definitely gonna
Appreciate it.
yeah, I'm definitely gonna plug you in. um but how have mortgage lending practices evolved over the years you've been in the industry?
So I will say they've had their changes, right? So mortgage
Mhm.
lending in general changes constantly. They're
Mhm.
upgrading stuff constantly.
Mhm.
I got in the business in 2021, so like
Okay.
right after COVID. So
Mhm.
I when I entered the business, it was like low interest rates and everybody was refinancing, it was purchasing, everybody was going crazy. I was like,
Yeah.
what in the world? What did I just get myself into? But in that case, lending was what it was. So, we had to there was a lot of loose restrictions and guidelines, and
Mhm.
now lending may be a little bit different because you don't want to go over the value or purchase the home at too much. So, um there's a lot of things that change. A lot of things have changed. And it's like I said, it's always revolving. It's always constant. Something's always changing. So
Yeah.
when we had 20, not 2020, 2008, when the housing market crashed, and then they had to put some things in place then, and then here we are and we're still putting things in place. So
Yeah.
everything's changing always.
Yeah. It's funny because when you were talking about, while you were talking, I was thinking about 2008, and it seems
Yeah.
like every time this happens, it's something directly related with the housing market.
Oh yeah.
And, like in 2008, it seems like what I was reading, and I remember vividly being in the recession or whatever. It was like they were just approving everybody for mortgages. And everybody was filing for foreclosures. And it's like, well, how did they get in these houses in the first
It was like that Oprah thing when it was like, you get a house, you get a house, you
place?
get a house, you get a
Yes,
house, you get a house. Like
yes,
everybody just gets a house.
yes, yes.
Like that it is. But now we have tighter restrictions and tighter
Mhm.
guidelines that are put in place because of that.
Yeah.
And then now we have even tighter ones because of COVID. So
So was the same thing happening during COVID, like in terms of just a free for all in a sense?
no, it felt like it. I ain't gonna lie. I ain't gonna hold you. Like
Yeah.
it felt like everybody was getting 2%, 3%,
Yeah.
3.5%, you name it. But no, it's not. I don't think it's gonna go back, or it doesn't feel like that in a sense.
Mhm.
It's just some things are starting to get put in place so that we don't have, like, people can't do kind of some of the more lenient things that they did at that time.
Okay.
So because of COVID, there's a lot of things, I guess, lending, I would say lending may have not thought of. And now as we get back to normal, we're starting to see a couple of things just change.
Yeah. Yeah. I mean, and as time goes on, I'm sure there'll probably be even more, rules put in place. Because kind of like it's like a reverse learning type thing. You learn from what you made a mistake from, so that
Pretty
you don't go
much.
back into that. So
Yeah.
that makes perfect sense. Um, so in your experience, what are some common mistakes you see borrowers make, and how can they avoid them? This is a good one. We'll be here
Oh
all
man.
night.
We could be here all night. I can go from, you want A to Z or 1 to 100. No, I think one of the biggest things is, I would say, looking at homes and looking at things, like, things are shiny on social media and
Mhm.
things look great on social media, and we all want luxury because of social media. But I think one of the biggest mistakes is not finding out how much you can get approved for first. What you looking like? Talk about it. Let me talk about
Yeah.
See how much you can get approved for first, because then it kind of just brings borrowers and buyers back down to what they can approve. Because here lately, it just seems like we've been humbling some people essentially, and buyers, because this is what you can afford. So, whatever you see on Zillow or whatever you see on social media is fine and dandy, but make sure that what you're approved for. So you're not just getting you're going to get your dreams crushed, but you're not feeling so bad about it. You know what I'm saying? Like,
Yeah.
because social media, it has us all fooled, like the luxury living and the the nice amenities and stuff like that, which is fine. And some people can afford that. But right now, a lot of people can't, unfortunately. So just making sure you get approved for what you need to get approved for first. So you know exactly how much and what you could be looking for.
Yeah.
It might not be a shack, but it might not be a mansion. We just need to make sure we like in between.
Well, yeah, and to your point, when you're saying about pre-approvals, I don't think people understand the importance of getting that, because a lot of times like you said, you're wasting time.
Yeah.
You're not only and time is money in this with you as the client, the loan officer, the realtor, everybody is on a time crunch. So it's like we're wasting time. We riding around on a golf course community, and I ain't got no problem.
That's fine. Me too.
We
I ain't
all
got no issue.
yeah. But again, come on now, we got to be realistic with this.
Yeah, I know I'm not going to buy a house on that golf course. So, I'm gonna wave to you while you're on your patio, but
yeah. So it's like, we have to be realistic. Again, it's no problem. We have no problem with, working yourself up to that point, but it's like, again, time is money. We don't have time. And I know a lot of agents that's like, I don't deal with people that's not pre-approved.
Yeah. Because why not?
Why would I?
Why would you? Like, essentially,
Yeah.
because you don't know how much they can afford. You don't even know how much you can afford.
Right.
So why are we wasting, and emotions too. Emotions get tied behind that. So if you go out and you find a home and you look at it and without getting pre-approved, like you just tied emotions to it. And now you get discouraged. You set yourself up for failure.
And then not only that, like you said, you go inside of a house and it's like, oh, this is my house, like you said, emotional. It's not realistic. And like you said, unfortunately, social media has painted this, everybody can afford the same thing. And it's okay.
It is.
It's okay.
But just know it may not work out for you.
So get that pre-approval. And matter of fact, go to Shauna for your pre-approval.
You know what I'm talking about?
So in your experience, how has economic trends and changes in interest impact the mortgage market?
Why are you throwing these tough questions? Well, and your economic trends. So pretty much, I would say the biggest thing is mortgage rates are going to move when interest rates move, but not every time, right? So as interest rates kind of decline, maybe mortgage rates will decline, vice versa. But the mortgage rates are not based directly on interest rates, like your car loan or your credit card interest rates. Those have every day those change. That they're like they have no correlation. Mortgage rates are actually determined by largely by your CPI, which is your consumer pricing index. So with that being said, once those change, if there's some movement in those things, which is your price of goods and services, once those change and people start getting jobs and inflation gets better, that's when you start seeing mortgage rates make significant changes. So with that being said, I mean, once interest rates kind of do a thing and the economics do the thing, and housing does their thing, and gas prices does their thing, and food does their thing, then we start seeing those changes in the mortgage market and in affordability. You know what I'm saying? Like, because right now we're at a crisis of affordability. So once everybody starts being able to come back to being being able to afford the homes, then we might have a housing crisis, right? Because once everybody can go back to being able to afford a home, and mortgage rates come down, right?
Mm-hmm.
And housing prices creep down,
Right.
then you start seeing people come back to the market, and then the housing market kind of jumps back up. So it ebbs and flows with the economic trends that goes along with it. But
Mm-hmm.
just remember, I guess the main thing is that mortgage interest rates are not directly impacted by like your actual interest rates. It's actually like inflations and jobs and gas and food, all those things. So if we just start to see a decline in those rates, then we might see a decline in everything else too. Yeah.
Wow. You know, when I hear, when you were saying about how everything is impacting one another, it's like, can you imagine the person's job, like an economist that has to balance all that?
No, thank you.
Oh, heck no. Heck
No,
no.
thank you.
No. Because it's
I
like, based on your explanation, it's like all about checks and balances. So like if everybody's able to run and buy a house, then it might not be enough houses for everybody, which would then cause a housing crash.
Right. Or just not a
Wow.
crash, but maybe just a crisis, and
Crisis,
and
yeah.
then vice versa. So if everybody is able to buy a house and interest rates come down, and we're going to be back kind of how we were in 2020, right? In 2021,
Mm-hmm.
when we were at 3% and everybody was ready to buy a house, but
Right.
then they were ready to buy the same house as 20 other people, and that jumped the housing prices up.
Yeah.
So it's one of those things that we have to kind of just watch, and it
Yeah.
changes, ebbs and flows. It changes all the way through,
Yeah. Yeah. That's and also like to the point about interest rates. I think that's like another, I don't think that we put it on here, but just like what kind of insight or tea can you give about interest rates? Because I mean, you obviously just explained it now, but people I think a lot of people are expecting for the rates to go back to
Not happening. So we will not see 2 and 3% again in maybe my lifetime, maybe our
Yeah.
lifetime, in a very long lifetime.
Yeah.
Um, and honestly, I don't know if we really want to, but who knows? I think we can see 5 maybe again. Maybe low 6s
Mm-hmm.
again. High 5s like 5.75, things like that. But we won't ever see 2 and 3, at least in a very long time. So I think just a tip I would give is that if you are waiting for those interest rates to go down to 2 and 3, you're going to be waiting a long time, right? So, like a very long time.
Mm-hmm.
And B, once they do come down to even a reasonable amount, like a reasonable interest rate, like the 5s, high 5s, 5.75, 5.5, everybody's going to be entering the market, and we're going to be, like I said, back how we were in 2020 and 2019, 2020, when everybody was bidding for the same house.
Yeah.
So essentially you're going to overpay for the house that you really want, when right now you can get it and not overpay.
Right.
So I think that would be like a pro tip, just don't wait, and don't wait on the sidelines for 2 and 3 and 4, even,
Mm-hmm.
5.5 maybe. But again, you'll be paying more. So you're paying less in interest rate, but paying more for a house, because everybody and their family member is waiting for you for the same thing that you're waiting for.
Right. Right. That's why I think like back when I sold my condo, I think that's why it sold so I don't even think my house was on the market for like a week, and then like I came out really good, but it's like it's because I had so many showings, and it was like when I first listed it, it was like showing after showing after showing. But obviously I was living there, so I had to wait to the weekend. But I couldn't even go home on the weekends because
Yeah.
it was like showing after showing. And like you said, it was like people. I know a lot of people that sold their houses during that time, and they came out really good because, like
Yeah.
you said, it was like you can ask for whatever you want to because it's like 100 more offers after you. So if you say no, I got 99 more people back
Yeah.
behind you.
Yeah. That's fine. Move
Yeah,
on.
right. It's gonna get sold.
Yeah. Yeah. And
Yeah.
a lot of people bought a lot of things cash at that time too. That's just
Hmm.
not the nature that we're in right now. A lot of people still buy cash, but a lot of people are financing too. So
yeah, yeah. Wow. So what advice do you have for clients with non-traditional income sources when they're applying for a mortgage?
talk to your CPA, and your CPA is not me. I am not the CPA. Talk to your CPA and make sure that you have your, your taxes done properly,
Yeah.
and make sure that you have your documentation, like verifiable documentation available. There's all types of loan products that we can do for non-traditional borrowers, like self-employed borrowers or investors or something like that. But we do have to have verifiable documents. So if that's bank statements, we have to make sure that you're not, wiring and doing some crazy. We don't want that. So make sure you have. We don't want that. Make sure you have like the verifiable things, and we can help you. Like as brokers and mortgage professionals, we can help you. But we also have to make sure that you also have to make sure that you have your ducks lined up. So I would say the first step would be to definitely talk to like a CPA and make sure that you're filing your taxes correctly, like your business taxes, if you're going to do those, or if you're doing like your financials correctly, because once we start getting into it and getting into those numbers, we may have questions, and it's inevitable. So just making sure that you have those documents.
Yeah.
Yeah.
Yeah, definitely. When I think the other day when I went to the what was this? The Wealth Watchers Expo. It was really good, very informative. Um, and they were saying, obviously the 2-year thing, which I think is pretty much the standard, is like at least 2 years of all the documents that you just listed, for the unconventional income. But yeah, don't be trying to come around Shauna and you ain't got no verifiable documents.
Yeah,
she won't be able to help you.
It's tough. It's tough. There may be a situation one or two times that I can probably slide, if you just, but yeah.
Yeah. Just keep it on the up and up. We're not doing this.
And not for nothing, I think you don't want, to go to jail for something stupid. So just make sure you get with your CPA. If you have some things that you write off, make sure that you're writing off the right things and the right amount, and make sure that, because some things get written off and it's like, okay, that just decreases your income versus you wanted to have more income. Now you're showing less income. So talk to your CPA about it.
Yeah.
Not me. Your CPA.
I don't want that headache either. So how do you foresee the future of the mortgage industry, particularly with advancements in technology and automation?
I think the mortgage industry is a relational industry in general. We're very personable, like it has to be kind of one-on-one. Like we build relationships with everyone. So we build relationships with real estate agents and title companies and the borrowers, the buyers, your clients. So we're constantly building those relationships. So I don't know if technology and automations and things like that are going to actually be able to replace that connection or that feel as much as people would think that it would. But I think it is great to have for like as tools, right? Like, so if you have them as a tool for setting up your emails, like Gmail. I mean, you set up your email at 8 a.m. to send it out, or help you with, your creative and things like that. Like as you use them as tools and resources, I think those are definitely be things that we'll definitely see and definitely use and definitely encounter. But taking it, I don't foresee it taking over the actual mortgage market. Like I don't see it, because as much as we want convenience, we still want a live person. We still want to talk to somebody. We still want, like, you don't want to talk to, would you rather talk to the 1-800 automated number, or would you rather talk to the 1-800 person? Like you still want to talk to a person, because the automated number is just going to make you mad. So It's the same thing. I think that we still want relationships. So I don't know if that's even going to make a huge difference in technology or any automations or AI or anything like that.
Yeah.
Yeah.
I mean, I completely agree, and to your point when you were talking about, AI and things like that, like you said, using it for your back end business, like, the stuff that the people don't see in terms of, answering the call or emails, like you said, things like that, of course. But the face to face interaction, I think people trust more, obviously, getting
Yeah.
a feel for who you are, your personality, if you're personable, if you're not personable. I mean, either way, whatever. But people want to know who the person is that they're dealing with. I mean, obviously, when you're talking about buying a home, that's one of the biggest purchases ever. And
Okay.
so I'm not going to a computer to do this. I'm not doing that.
No.
And when you were saying representative, girl, when I'm on the phone and I got the Yale representative to the top of my lungs,
Keep pressing 0.
no, they done got so good now that they say this is not a valid option. Okay, got it. So I'm gonna keep screaming your representative then. I can't stand it. I cannot, and I do not like that.
Yeah.
I wish that we would have kept it when calling somebody on the phone.
Yeah.
And
Yeah.
to be honest, I don't have a problem talking to the people that's across the water. At least I'm
Yeah.
talking to somebody. Girl, I
Not
can't
the
stand
people
them.
across the wall.
That's what I had.
I mean, in the grand scheme of things, you're going to buy from who you like, know, and trust, right? So
Correct.
you can't like, know, and trust technology. You just can't. It's going to fail you it's man-made. It's going to fail you every time.
Every
So,
time. Yeah.
yeah.
I don't like that for me. So what strategies do you recommend for clients looking to refinance their mortgage?
Make sure that it's going to make sense for your situation. In some cases, right? So if you have a mortgage and your mortgage is 5% interest rate, but you have 3 credit cards that are 22% interest, and you have your auto loan that is 8% interest, and you have all these things that are over here accumulating interest or having interest, and you have the ability to take out more money from your refinance to pay off those things, that would be a benefit to you. Even though you may lose your 5% interest rate, you're also losing your 22, 8, whatever. So you're saving money over the long run. So but you have to make sure that it's going to work for you, because obviously the payment may increase or, something may come up down the line. So, it's really important that when you do talk to a mortgage professional about it, that you ask them, right? Like ask them how much this is going to save me if I refinance, and then also your term. So if you've got a 30-year mortgage 20 years ago and you only have 10 years left, is it going to make sense for you to refinance into another 30 years and then gain your 20 years back that you worked so hard on paying off? So I think my tip would really be to make sure that it makes sense for you and works for you, and it's going to be beneficial for you in your financial future, because ultimately it's your money, but you definitely want to make sure that it's beneficial. Even if it's a higher interest rate,
Right.
you may be saving again some money on the end over on the other side.
Yeah. So I have a 2-part question for that. So the first one is, so in lieu of doing a refinance, would you then recommend like a HELOC, like a home equity line of credit, something that's, a revolving line, something like along those lines, and obviously lower interest rate just because it's a revolving.
Yeah. Yeah, you could do something like that. I think it's always great to have like some type of line of credit or home equity line of credit on your credit report. Usually it's not like, it's for like a limited time. So it might be like 8, 10, 15 years. But it shows it helps your credit because it shows your worthiness, like your credit worthiness and your risk type of thing. But I think those are great if you have to do some home repairs or debt consolidating or something like that to have. Definitely an option if you don't want to get rid of your 2 or 3% interest rate, to have an equity on the side. It's just going to be additional payment again, but also if you're saving money or getting rid of payments over here to make into one payment, then you could do that. That's a good option too.
Yeah. And then my second question to that was like, have you noticed a spike in cash out refinances? Like, because I'm hearing like a lot of agents or like a lot of mortgage professionals saying, like, marry the home, not the rate. So kind of like, get in and then kind of like
Yeah.
do a refinance if you can. Are you noticing like more refinances now since we are?
Yeah, they're starting to come in. We aren't there just yet as far as refinancing and rates. Maybe closer towards the end of the year, or something like that. But there are some programs that we can offer. We're able to offer right now. We have like a great deal for VA and FHA buyers that did purchase that we can do like a great refinance rate for. But they haven't started rolling in just yet. There will be, but they haven't. I mean, I think right now refinances are based on your need, right? So taking cash out to, for as we've done like for people college, like kids colleges and debt relief because things are just costing so much for credit cards and stuff like that. So utilizing those right now has been here or there sporadic, but it is situational. You have to have a need for a refinance right now, but there will come a time, maybe towards the end of the year, beginning of the year, when people will refinance for sure.
They're gonna flow in.
They're gonna flow in. We're gonna be right back to where I started again.
So how can borrowers best prepare for the possibility of rising interest rates in the future?
Start saving. Really, it's really whatever you would do to start, like to get you to where you need to be, right? So if you have to look at your credit report and figure out what you need to fix that. If you have to create a budget and start saving, do that. Whatever is kind of like your hold up now or the hold up that you feel like you have now, work on that because when the rates do come down and interest rates and housing and everybody comes back in the market, you want to make sure that you're set just like everybody else.
Yeah.
Right. That waited and make sure that you're set. So that way, if you do find something, you don't have credit challenges, you don't have down payment concerns, you don't have, whatever the issue is of, late payments that you have to worry about. Like, so just making sure that you're talking to a mortgage professional or somebody that can kind of guide you down the line. Don't go out and say, okay, well, I'm waiting, so I'm going to go buy, a big Becky Benz and get a $1,800 car payment. Like, don't do that, obviously, but, just make sure you set yourself up so that way you're prepared and when the time is ready, when the time is right.
Yeah. It's so funny because like when I went through my whole process, I think I called my mama and I was like, Mom, I'm done with this. Because it's like when you were talking about don't go out and get new things, and, make sure you're prepared. Like working myself up and then going through the process because it felt like to me, this person wanted everything from me.
Everything
Except my firstborn. Maybe she could have. I feel like she could have wanted some. My firstborn blood draw, a piece of my hair. It's like, bruh, give me the clear to close.
Yeah. But, I mean, it's a deep process.
Yeah, but at the same time, I understand it because again, it's so much risk, and you want to make sure, obviously, and then for mortgage professionals that actually do care about their clients and want to have that good rapport and relationship with them rather than somebody that doesn't and they just looking at it as like a check. It's like you got to separate yourself from the good ones versus the bad ones. So it makes sense seeing it from the other side. But girl,
we ask for everything. Everything. If you transfer money from one account to the other account, we want to know why. You could have said it was for my kids, and we'd be like, okay, that's fine, but let's not do that again.
Yeah. Like, don't do
Because
no movement.
no, don't do it. Because we have it. Those going back to those lending practices, right? So before they was just giving out money, and now we're like, we gotta make sure that some things add up, and you good to go. So yeah, just if there's some things, any challenges or anything that you have to work on, just work on them now. Work on them now. If you don't know what they are, then let's talk so we can make a game plan and figure those out for you. But just make sure you set yourself up.
Yeah, for sure. So what are some red flags to watch out for when comparing mortgage lenders and loan offers?
Red flags. I think you could just tell the vibe of someone. I'm a big vibe person. So if they don't give you the vibes, and they feel like, if you feel like they're not asking you enough questions, or they're not getting to know you, or they don't follow up with you, or they don't talk to you, or you haven't seen them, heard them, whatever, ever before, then that's a red flag, right? So you have your online lenders and your online mortgage professionals that you can go to, and that's fine. But again, we're going back to relationships. So if you're a person that wants a relationship with somebody, then you just need to connect with them, and they want to connect with you. So that would be the biggest red flag. If you don't hear from them, if you don't feel like they care, if they don't ask you the right questions, or if they're even not asking you questions at all, if they're not trying to build rapport with you or relationships with you for them to be your forever, like in your life forever, you want to make sure that you can come back to that person. If you don't feel like you can come back to that person, then that's not your person, right? So I mean, that's just pretty much the biggest red flag. Make sure that they're a fit for you and you're a fit for them.
Yeah, I agree. And like, to your point, I'm big on vibes too. And it's like, I mean, it's a scary process. So definitely, like, for a first time home buyer, like, you pretty much, I know I wanted somebody to hold my hand, like, because I was so afraid. But luckily, my mom had purchased a home before, but I was able to use her. But it's just like, I will be laying in bed like, oh man, I should ask them this. But it's just having that open line of communication, being able to, and then also, if the person is good enough on whichever side, the inspector, the MLO, the mortgage professional, however, you want to refer your friends and family to them.
So and it's like, they're not the ones, if you don't want to refer them, that's not that's not good.
Right. So I think it's like you said, the vibe is a huge thing. So can you share a success story where your expertise made a significant difference in your client's mortgage experience? Oh, I know you probably got a lot of these.
I know. I'm like, who? I won't say, I don't know if I have one that I can stand out like specific, because I think each and every one of them is definitely unique. And yeah, I don't know if I have one specific, but I will say, like, a success story in general is the fact that I helped a young family. Well, they weren't a family at the time, but a young couple. They had just got married, and she was buying a house, or they were buying a house, but she bought it. But they were buying a house, and then a couple I got married, and a couple months later, I got a card for the baby shower, and then you go to the baby shower, and then it was a housewarming. So it's housewarming, baby shower. So you start just becoming family and friends with your people. They're not, like I said, going back to relationships. It's not like a one-sided thing. So that's always the joys, and also seeing smiles at the closing tables when it is your first purchase. You made it. You gave all your blood. You didn't sign all the documents. Your hand hurts. Now you get the keys, and those are the smiles that you want to see. So those are always success stories. I don't necessarily have like one in particular. Just being able to be a part of the experience, and being a resource, like if somebody does have questions, or being available to answer those questions. I think that's, what I'm here for and what my purpose is here for. But they're all different,
Yeah.
let's just, as long as you're smiling, as long as you love the home, as long as
Right.
you invite me to whatever comes up, we'll be good.
Yeah. Yeah. Well, that's good. And obviously, you seem like a very personable person and somebody that's very relatable. Like you're not like a kind of like a hoity-toity type of agent or MLO. I'm sorry. It's like it's like one of my friends or one of my homegirls. Like it's like very personable and a nice person. So it's like I'm sure that a lot of your clients, present, past, and future, would probably definitely love to work with you. So
I can't do the stiff
yeah, like, ooh, what's
from the
wrong
minute
with
you talk to me at the beginning of the phone call, I'm gonna probably crack a joke or talk to you like you're my friend. So
Yeah.
it is what it is. If it, and like again, if I'm for you, I'm for you. If not, no, it's okay.
Yeah. Yeah, exactly. So just like another small question. So do you underwrite loans? Like what states do you underwrite loans in?
I don't underwrite any of the loans.
Well, I'm sorry, what do you originate loans in?
Yes. So I originate, underwrite. So you don't want me to underwrite anything. So I am licensed in Florida, but the company that I'm with, Future Home Loans, we're licensed in all types of, we like to say the SEC. So we do Georgia, North Carolina, South Carolina, Virginia, Tennessee, California, Arizona. So there's several states that as a company, we're licensed in, that I can work with buyers, sellers, whoever they want to work together. I can work with them. So if you have a family or friend that's in Georgia or South Carolina, North Carolina, that want to buy, we can always work together still. But myself, I'm licensed in Florida.
Okay, gotcha. Yeah. Now, tell the people how they can reach you. Also, like I said, I'm gonna go ahead and plug you in, but you can go ahead and on commercial.
Yeah. So Instagram is pretty much, I'm on Facebook, but Instagram is pretty much where you can find me. It's at mortgages.by.Shauna. If you just put in Mortgages by Shauna, it'll pop up. And Facebook, Shauna Thompson.
Okay. All right. So there y'all got it. Huh?
So that's where I be.
Okay, got you. So like I said, I'm gonna definitely, you already know I'm gonna plug you in. So, but yeah, so that was a great conversation. I really enjoyed it. I learned a lot. I mean, I don't pretend to know everything. I don't want to know everything. So
yeah,
definitely information packed. So yeah, we gotta get you back on here another time. I don't know when, but we gotta get you back on here.
Just let me know. Let me know.
Will.
I appreciate you having me, and
for sure.
And if you guys need anything from me, you always know if you need anything from me, just give me a call.
For sure. Well, thank you again so much, and I will, like I said, I'm gonna tag you in all these videos. So be prepared to be sick of me. So,
got it.
Okay. All right. Well, you have a good night, and thank you so much for stopping by. And I wish you nothing but success on your journey. Obviously, go get it.
We out here grinding, you and I. We did be here.
All right. You have a good night.
You too.